Nobody in Nashville's government knows exactly how much investment managers make in profits from public employee pensions. Michael Riker / the Tennessean. Metro Nashville pays nearly as much in investment fees as the state pension fund, which has more than 10 times the assets of Nashville and better investment returns during the past decade. Photo, George Walker IV / the Tennessean, by photo. As the Nashville economy prospers, city officials have plenty of tax revenue to fund pensions for firefighters, road crews, and other public employees. Nashville can comfortably offset any investment shortfalls in its $3 billion pension fund without cutting social services or police, as some less prosperous cities have done. During the boom, many millions also flowed unnoticed to Wall Street investment managers. New city data shows that Nashville paid $39 million in investment fees in fiscal 2017, more than 40% above the previous year's reported fees, while the fund's assets increased by 10%. As a share of its total assets, Nashville's fees are among the highest in the nation, experts say. The city pays nearly as much in investment fees as the state pension fund, which has more than 10 times the assets of Nashville and better investment returns during the past decade. Meanwhile, the city's taxpayer-backed pension investments are earning modest returns. With a 13.5% gross return in fiscal 2017, Nashville's investments performed slightly better than the 12.7% median of comparable large public pensions tracked by the Wilshire Trust Universe Comparison Service. Even before the previously undisclosed fees were accounted for, I think it's fair to say that the fund is higher in cost than most public pension funds, said Greg Menace, director of the Public Sector Retirement Systems Project at Pew Charitable Trusts. This was the first time Nashville calculated some of the hidden costs in its private equity funds and other high-risk investments, after a Tennessean request for information. Members of the obscure Metro Investment Committee have steered an unprecedented amount of the retirement savings into risky and high-cost alternative investments, private equity funds, junk bonds, loans, and other unpredictable bets. Nashville has placed nearly 80% of its nest egg into these investments, up from 57% in fiscal 2015, while the median for large public pensions is less than 20%, according to Wilshire data. While other local governments have taken steps to control Wall Street fees, Nashville officials show no indication they are concerned. Instead, they point to the fact that the pension is well funded as evidence that their investment policies have yielded positive results for Metro employees, according to a statement by a spokesman for the Metro Finance Department. Finance Director Talia Lomax O'Daniel declined to be interviewed. Experts said the additional disclosure is the first step in scrutinizing the investment fees. If everyone, including all the board members, has complete information, it stands to reason that there will be more discussions about whether the returns generated are worth the cost, Menace said. Among other public pensions, Nashville's fees stand out.